People think of gold as it's this relic, but the reality is it is on the balance sheets of central banks. And if they're acting more responsible here and they're starting to grow their positions, this is, we saw what Singapore came in for the first time in 30 years. They bought just like 2 years ago. So you're having new buyers come in and step in to where suddenly is the gold in the right place, in the right form, at the right time. And clearly right now, there's a problem. There's a bottleneck. And,
right.
We're also seeing the same thing with silver, for sure. It's not in the right place at the right time.
Gold is making record moves and significant shifts are unfolding in the physical market behind the price surge. Large amounts of gold are being transferred from London to the U.S., raising concerns about supply constraints, central bank accumulation, and hidden risks within the system. JoshPhair, founder and CEO of Scottsdale Mint, joins to explain what's driving gold's rally, the impact of China's new $27 billion gold investment policy, and whether the world is heading toward a global shortage. He emphasized the growing importance of jurisdiction in the precious metals market. Tariff concerns and the increasing risk of a significant trade war continue to shake financial markets. Adding to the uncertainty is speculation about a gold shortage in London, driven by a surge in shipments to the U.S. According to the Financial Times, traders have amassed a massive $82 billion stockpile in New York. Since the U.S. election, nearly 393 metric tons of gold have been transferred to New York's COMEX commodity exchange, increasing inventories by almost 75%, the highest level since August 2022. Although Trump has not announced specific policies on bullion, he has consistently threatened broad tariffs on U.S. imports. Just this past weekend, he declared plans to impose a 25% tariff on all U.S. steel and aluminum imports, with duties applying universally to all countries. Despite Trump recently postponing tariff risks for Mexico and China, Phair believes demand for gold remains exceptionally strong. There seems to be an even greater push for gold and silver in the U.S., almost as if there's an unseen hand accumulating large amounts of metal. Meanwhile, gold is starting the week at another record high, with spot prices increasing to $3,000 an ounce. To break it all down, separate fact from fiction, and provide an insider's perspective, we're joined by JoshPhair, founder and CEO of Scottsdale Mint.
We noticed it back in December. There was seemingly a tightness in metals. We saw the exchange for physical premium grow up, the increase in price. That's the EFP. Normally, consumers don't see a small price. We're talking, if we're talking gold, we're talking sub $1. It might be really, really pathetic on a percentage basis. Suddenly, that price started growing not only on gold but also silver, and so we saw that EFP growing. Some people thought, could there be a fund that's blowing up that's got to cover their positions via physical? Why are the banks offering such a premium? So we've seen it traditionally where maybe last year we saw Shanghai offered a little bit of premium if you delivered physical metal into their exchange there. And now suddenly this was growing. And as we flip into U.S. after the first of the year, I think everyone realized this is primarily driven by tariff risk. And the banks are not in the business of taking risk. They do not want to pick up pennies in front of freight trains. So the goal was to get all the metal stateside. And traditionally, the banks are shorting or they're selling forward in the COMEX market, right? Then they buy the physical metal from somewhere else in the world and they import it to the States. And that takes typically more than a month. Gold is a little quicker if you can find an airplane. But airplanes were very busy right before Christmas, right? You had full loads of passenger vehicles, and you could only fit about 4 tons of gold per plane. And being well connected with the armed transport industry, this was a big issue. And so banks were offering, if you can promise and guarantee the metal that can clear U.S. customs before the certain dates, they were getting the business. And obviously we've seen now the premiums, continued on. And then just last week, Trump pushed out the tariff risk, at least for Mexico and China. But I think what we're seeing now is there seems to be an even greater demand here, almost like is there an unseen hand of somebody wants a lot of gold and silver in the United States. And so I think the theme of jurisdiction matters. And London, traditionally it's more of a trading headquarters, right? There's not a lot of consumption of silver in particular there. And so U.S. is a gigantic gigantic consumer of silver and imports over roughly 80% of its silver consumption. So we've seen gold and silver is continuing to come here and is now breathing. What you're seeing is now there's concerns of like, why is it delayed out of London? Do they, what's the situation going on? And so, it's a very real and it's causing concerns from every point of view.
Gold prices surged to another record high on Monday, continuing a multi-year rally that has gained momentum in recent weeks. Over the past year, gold has risen 44%, making it the best-performing asset among a basket of 12 leading global asset classes according to the BlackRock Investment Institute. This performance far outpaces the 22% return of the S&P 500, including reinvested dividends. JoshPhair, founder and CEO of Scottsdale Mint, notes that while Bitcoin dominated headlines in late 2024, investor attention has now shifted dramatically to the physical gold market, triggering a global rush for supply. This surge in demand isn't limited to the U.S. Central banks worldwide are expanding their gold reserves. According to Phair, the key question now is whether gold is in the right place, form, or time. Now, let's redirect our attention to a video.
If we take a bigger snapshot and look longer term, right, I think years is it's got to go higher. I think we all realize that the financial system has been somewhat, some people would call it's been cooked for a while. It's been broken for a while. And so now are we starting to see some fiscal responsibility coming in? Obviously we're seeing a lot of auditing all throughout the U.S. government. And now they're even talking about going to the Federal Reserve. And I don't believe we've had a modern day audit of that entity. So we don't know, but I would say my company in particular, we've been called, and it started in December. Hey, do you guys know where there's more gold refining capacity? And these aren't the normal bullion banks. And so, when you start looking around, clearly the whole worldwide, there's a big sucking sound of physical metal, and it's being transported primarily to the U.S. right now. So I think there's a theme here that it's a combination of how much debt, how many dollars do you have outstanding, and then how much gold do you have? And I think, right now we're seeing a rebalancing act throughout the world. All the focus has been on Bitcoin as we've ended 2024. And it feels like, boy, is it sure shifted to the physical gold market now. And it's a huge scramble all across the world. It's not just the U.S. that's bringing in gold. We've seen the BRICS countries, right, for quite some time are stacking. Well, when we look at ratios, if we go back 50 years ago, central banks held, gold was probably closer to about 80% of their reserves. And now, we dip below, I believe, 20%. And it's starting to grow. And I don't think the public is not aware. People think of gold as it's this relic. But the reality is it is on the balance sheets of central banks. And if they're acting more responsible here and they're starting to grow their positions, this is, we saw what Singapore came in for the first time in 30 years. They bought just like 2 years ago. So you're having new buyers come in and step in to where suddenly is the gold in the right place, in the right form, at the right time. And clearly right now, there's a problem. There's a bottleneck. And, we're also seeing the same thing with silver for sure. It's not in the right place at the right time. Probably both. The big dogs are getting positioned in right now. And a lot of it also is just that they're positioning it, and where they're domiciling it. Like I mentioned before, the jurisdiction. So a lot of it, obviously prices are going higher on gold first. So I think it's pretty obvious to see who is the buyer. Silver's starting to inch up. And as soon as consumers start to figure out that silver's now going to run yet another deficit, which means that we're consuming more silver than we're mining each year. Once they realize like AI, computer chips, solar's not going away, so we're going to see a lot of demand that comes into silver. People are going to realize, silver's got it has a lot of opportunity to do really good this decade. So I do see consumers waking up to this. People that probably don't own any precious metals might start taking a look at this and diving in.
Reuters reports that global bullion banks are flying gold into the United States from significant trading hubs like Dubai and Hong Kong, which typically serve Asian markets. This move is driven by the unusually high premium U.S. gold futures commanding over spot prices. If gold surpasses $3,000, just a less than 3% rally from Monday's levels, it would mark another historic milestone in what has been a booming decade for the precious metal. Gold crossed $1,000 during the 2008 financial crisis and broke $2,000 during the 2020 COVID-19 pandemic. The metal is on the verge of another breakthrough, reflecting increasing demand and shifting market dynamics. Is gold nearing $3,000 the beginning of an even bigger rally? Join the conversation. Share your thoughts in the comments. Give us a thumbs up if you found value in this video and subscribe to stay engaged with our community.